welcome to Bulls, Bears, and Bill, a weekly Dalton community television program on the financial markets. Brought to you by Bill Schmick, founder of Anoda Partners, and me, Rachel Branch, co host. And when Bill says financial markets, he means all of them. On each program, we will continue to share with you, our audience, why the markets did what they did and where they are going in the weeks and months ahead. Bill writes 2 columns weekly for several media and newspaper organizations throughout the country. The substance of Bulls, Bears, and Bill. Okay, let's get right into it.
Okay, Rachel, welcome back, everyone. Before we get started, I wanted to ask you that if you had any questions for Rachel or myself, please email them to us here at daltonctv@gmail.com. One more time, daltonctv@gmail.com.
Okay, first question. What will a shutdown of the government mean for Americans, and can it be avoided?
We'll know more. Today's Monday, and right now it's 1:30. Now the president and both Democrat and Republican congressional leaders are going to meet today at 3 p.m. So it's about an hour and a half from now, and which it's sort of like a last attempt at some sort of compromise. If a compromise is not achieved, we could expect the shutdown in the government at Wednesday midnight. Now, shutdowns in the past have always been sort of, or at least in recent memory, have always been 11th hour, sometime 11th hour and 59-minute compromises. The market, the stock market, the bond market is basically to date inured by the comings and goings and posturings on television and in the Senate cloakroom and everything else, because for the last couple of them anyway, the shutdowns have been avoided again at the 11th hour. Now, for my thinking, there's probably been about 14 total shutdowns that I can recall in the modern era. 8 of them occurred during the Reagan years. The last one was in 2018, and that took 34 days. That was the longest shutdown in history, and Donald Trump was the president during that time. The shutdown involved his insistence that Congress earmarked for him $5 billion to build his promised wall between the U.S. and Mexico. In the end, he didn't get his $5 billion, but he did get some money, enough to save face. But in the meantime, the stock market, the S&P 500, was down about 10%, which is the worst December, I think, in the history of the stock market since 1931. So basically what it tells me is that if there is a shutdown, and it continues and extended through that kind of a period, we have some risk in the stock market, which is at record highs. But right now, when I left, the stock market was up yet again with another record high. So as of now, investors do not seem to be discounting the risk of an extended shutdown. Now, in my column, if you had read it during the last week or so, I talked a bit about, as you said, what impact a shutdown would have on Americans like you and I. First of all, if you're retired, nothing will happen to Social Security. You will still get your checks. Go to the doctors, continue there because the Medicare will continue to work and function as it has in the past. The politicians on both sides know that those are hot potatoes, and so they will not be impacted by a shutdown. However, just about everything else will be, so you're probably not going to, even though you could still go swimming in the lakes and the state forest and so forth, most of them will be shut down. Most other services would be shut down. And this time around, there is some differences in this shutdown. Okay?
Yeah, that was going to be my next question. And
What is that?
you know, why will this shutdown be any different than the last dozen or so shutdowns? And thank you for mentioning Social Security and Medicare. That is of primary importance of those of us seasoned citizens
Yes.
who are living on Social Security and need Medicare.
Yes, yes. And Medicaid.
And
And notice I didn't say Medicaid.
Yep.
The differences are this, and they're important. Number one, the president has been frustrated in reducing the size of the federal government. You may remember Elon Musk, who terrified everyone in the first 3 months of the presidency with his Doge, which was basically with electric saw in the air, was going to be his way of cutting the federal workforce. And he did, and various agencies were told by the administration to cut what they could in federal employees. That did happen, but what then subsequently happened is that in the courts, many of those cuts, layoffs, were rescinded, and the government had to hire back those same laid off workers. This time, and so the administration's number count was frustrated. What Donald Trump has threatened to do if there is a shutdown is not to lay off federal employees, but actually fire them. Meaning that this, in his mind, is a way of doing what he set out to do in the first 3 months of his administration, which is to cut the number of people in the federal workforce. And that is a serious threat. Now, why he can do that now during a shutdown and the courts would allow it versus when he initially tried in the first 3 months, which the courts denied it, I'm not sure of the legality of that, but evidently he believes that he can do it. So that's a very, very serious change in the shutdown negotiations. Now, sticking with the Republicans and with Donald Trump's goals and objectives, a shutdown would allow him to reduce the federal work count. Number two, the U.S. Treasury and the Treasury Secretary, Scott Bessent, has two objectives now and in the future. One, which was to keep the dollar going lower, and number two, keeping the yield on the bonds, Treasury bonds, lower. Now, if there were a shutdown, the dollar would go lower and the yields on bonds would also decline, which would meet his both objectives. And he needs those yields down because every month he is auctioning billions and billions of dollars of U.S. treasuries just to pay for our out-of-control debt. So if he keeps yields down and he sells treasury bonds, he's paying a lower cost, interest rate cost. So a shutdown would benefit both lower yields for him, a lower dollar, which is what he wants, and for Donald Trump, less federal employees. So those are three pretty important variables that would benefit the administration if there were a shutdown. Now, on the Democratic side, what they're insisting on is number one, they want the discount on Obamacare premiums, meaning the amount of money one pays to have Obamacare insurance. During the COVID crisis, Congress passed an act which would assist payers of Obamacare insurance in their premiums, meaning that the government would pay some of those premiums to help out those on Obamacare. Now, that legislation sunsets at the end of this year. So, what the Democrats want is they want that to be extended, pass, so that it doesn't stop at the end of this year. And they want that now. They also would like all those Medicaid spending cuts that we have heard about that were passed under the One Big Beautiful Bill that actually don't come into effect until after the next election. They want those rescinded as well. And both of those demands are a non-starter as far as the Republicans are concerned. Their argument is just the Obamacare premiums themselves is over $1 trillion of additional spending. And they're not adverse to discussing this if the Democrats go along right now with passing a bipartisan continuing resolution. Now, that continuing resolution only gives a period up to November the 14th in which you can discuss a compromise before, once again, there's another shutdown unless a budget compromise is enacted. So the Republicans are saying we're going to pay $1 trillion for like the month of October, 44 days of compromise discussions. That's an expensive price tag. So both sides have reasons not to compromise. Now, the other thing about it is that the Democrats have polled their constituency several times. And the answer has been from the base, the Democratic base, no more compromises. You may recall that Chuck Schumer, the head of the minority U.S. Senate, Democrat, he did compromise at the 11th hour during the last budget crisis. And that blew up in his face. And so this time around, they don't have the constituency willing or have any taste for more compromise. So it's a more serious situation, I'd say, than the last couple of continuing resolutions and budget negotiations. And we'll probably know more after 3 o'clock today. One of two things are happening. Either, there will be some sort of workaround so that the Democrats say, okay, meaning that maybe the president says, okay, if you go along with this continuing resolution now, during the next 45 days, I promise you that we will do what you want, or some sort of thing like that. Will the Democrats go for something like that? I don't know. I mean, the latest I had coming in here among politicians, Republican politicians anyway, the probability of a shutdown, they gave it 85%, which is pretty high given that we've got 2 days to go. So we'll see what happens.
Well, I really think both parties need to be aware of the work that they are, or actually are not doing for the people. And
Yes.
that is a real, and there are a whole bunch of independents or non-affiliated people that are part of this country too. But how long can you keep cutting and cutting and I'll say not come to consensus of the real needs of everyday people? That's my 2 cents worth.
Well, it doesn't seem, it seems to me that as without getting that political, one cannot be political no matter what you do today in this country. But the Charles Kirk, the last two mass shootings, one of which was Sunday, another one was Saturday, I think. The problem is that the partisan anxiety and anger seems to be accelerating in the country. No surprise, that's what we're all expecting if you believe in a fourth turning. So that this budget discussion is being held within a period of increased rancor and anger between the two parties. That may also contribute to a shutdown. Who knows?
It's also tangled.
Yes.
It really is tangled.
Yes.
So, just a side note, to my understanding, when the bond markets go down, the stock market goes up. That's kind of general rule that I have. So you just talked about the bond market going down. The stock market will go up, won't it? Or historically.
Historically,
Yeah.
You're right. However, this is a different age.
Yes.
So I'll give you an example. It was a very good question. The Federal Reserve Bank cut interest rates 3 weeks ago. Now, normally what you would see is interest rates would go down because the Fed cut. That's good for the stock market. The stock market would go up. However, that's not what has happened. The long bonds, that is bonds with a 10-year, a 20-year, 30-year maturity, interest rates on those bonds have gone higher since the Fed cut. The short time rates, the 3 months, 6 months, 1 year notes, maybe even 2 year notes, right, they went down. The yields on those went down. But the stock market is normally controlled by, as you said, the yields on the long bonds go down, stock market goes up. In this case, yields went up and the stock market went up. Why and what's going on? And this, by the way, began to happen last year when the Fed first cut interest rates after 3 or 4 years of tightening. The reason why is because the bond market sees that cutting interest rates, as the Fed just did, in a period where the gross domestic product of the economy, the growth of the economy, is still going higher and higher, while inflation is sticky, says to the bond market, no way, I need higher yields in an environment where you, the Federal Reserve, are cutting interest rates, which is only going to make inflation go higher.
Do you remember?
Different.
Yeah, next question. Do you remember years ago, and I'm going to ask this in part of the next question, some experts claim the stock market is in a bubble. What do you think? Do you remember the term a Chinese market? Would this be considered, and to me, it's like the Chinese market meant like an enigma. What is going on? That term, is that connected to the term bubble? What is the
I don't
bubble?
know. I don't know the Chinese market. The Chinese market is one of the best performing markets over the last 2 years. But
it
I don't
wasn't
think
u-
you're
I'm not
meant
u-
that. No,
It wasn't used that way.
no. The bubble.
Probably like the mix of Chinese checkers.
Yes, I see what you mean.
Yes.
I think there are elements of a bubble that are now appearing in the stock market, for sure. I mean, there are a number of stocks, companies that have no earnings, hardly any sales, that are tripling. Okay, very similar to what I saw during the dot-com bubble, where just the simple name of .com in their company name was enough to triple the price of their stocks. That's what happened in 2001. And today, instead of .com, it's AI, artificial intelligence. Just some sort of hint that the company is involved in the production or creation of artificial intelligence seems to be enough to triple the price of a stock.
Are you using the term bubble as there's nothing underneath it? It's just
There's
like
there's no
substance holding
no
up the
fundamental
holding up the
value.
paper.
Yes, there's no fundamental value outside of the name or the symbol AI, artificial intelligence. And the so I see it's not there aren't the bubble is not throughout the stock market. Well, it wasn't either during the dot-com bubble. It was mostly in the NASDAQ market, the technology market, where the froth had gotten to extreme proportions. Now, sort of the same thing today, although I don't see where the valuations, believe it or not, are as extreme as they were in the dot-com bubble and then bust. So, and I have to remember that the dot-com bubble was something that began in 2000, 2001, and even though valuations on thousands of stocks were crazy, they continued to go higher for another year and a half before there was an actual blowout and crash in the NASDAQ. So just seeing that there are elements of froth in the market, yes, there is a bubble in certain sectors. But on the other hand, there are plenty of areas in the stock market where valuations are nowhere near some of these AI darlings. And if you look overseas, the valuations are much cheaper. One of the things that has just occurred in the last couple of weeks is the uninvestable Chinese market has suddenly become investable. One of the reasons why is the companies in China that are involved in artificial intelligence, and some of these companies are big, meaning they're not quite as big as Microsoft or Meta or Google, but they're substantial companies who are also working on their own version of AI, and yet they're selling at half the price, a quarter of the price of the American companies. And so suddenly American investors are starting to look at the Chinese market and liking what they see.
Okay. For our last question today, September and October are usually negative months for the stock markets. September was positive this year. Will October be positive as well?
Yeah, I mean, historically, on a seasonal basis, meaning there are certain months of the year where the stock market does better or worse, September and October are the most negative period for the stock market. That has to do with flows of capital more than anything else. Global flows of capital. And I won't get geeky about it, just believe me, that's what it has. This time around, we're, as you said, as you pointed out, September, no way. And now here we are, and 2 days from October, and the markets are still hitting highs. Now, number one, I don't expect the stock market to do anything prior to October the 1st. We're in a period of what I call window dressing. That's when money managers, at the end of October, at the end of September, they will release how they did to all their clients, and they'll get their statements in October. So what happens is they window dress their portfolios. They look at those stocks that have done the best during the quarter, and they'll buy them. Because normally when you get your statements, it doesn't say when the money manager bought the stock. It's just that he's in NVIDIA, or he's in Google, or he's in whatever is going up the most. So that period doesn't end until October the 1st. So we're at the end of September, but not, this is the period of window dressing. So let's roll forward to October. Yes, there at some point there's going to be a pullback in the market. Will the shutdown, if it occurs, be that trigger? It certainly could be. As I told you, the one that happened in 2018, 34 days, saw a 10% decline in the stock market. Could that be the trigger? It could be. So that's why I'm so focused right now on the shutdown, or whether or not it'll occur. At the same time, what has really happened in September and could continue to happen in October is the fact that the Federal Reserve Bank cut interest rates in September, which supported the market. You're not going to sell the market when the Fed is cutting rates. Now, the market is expecting a further cut in this October. Now, the poly market, which is the betting market where people actually put their money on what they're thinking, the poly market has an 87% chance of another cut in October. And I think it's 60-some% chance of a cut in December. Now, if this were to occur, whatever pullback there would have to be minor, because what's happening, if this is the case and investors think it is, the Fed's going to cut again in October and again in December. What's going to happen to the stock market? It's going to go higher because interest rates are going to go lower. So whether or not October, it's a question mark. Let's see what the shutdown brings before anything. And if there is no shutdown and the Fed is seriously going to cut again in October, I don't see, if we have a pullback, it would be minor and something to buy on.
Well, I am really looking forward to this week's column and watch you untangle all of these multi-layered, faceted things that are going on.
And remember, everyone out there, if you have any questions, please email us here and we'll answer them at daltonctv@gmail.com. daltonctv@gmail.com. Thanks a lot.